Good morning, guys. I am late to the stream this morning. I am late to the stream. You can make fun of me. I was running around like a chicken without a head. Good morning, guys. Welcome in. I hope you guys are all doing well. It's 8:36 a.m. We're 6 minutes late to the show, so we need to catch up. We have no time for any introductions this morning. I'm not even gonna ask you guys how you're doing. We're just gonna literally fly right through. Yep, I am late. So for that reason, we just jump into it. My face is huge right now. Hold on a second. I look like I look crazy today too, but I'm here. It doesn't matter. Does not matter. Okay. So let's jump into our session this morning. We have a lot to go over this morning. Things are. I can't read the chat because you guys are crazy. Things are consolidated, right? After the FOMC session yesterday, the market chose not to move, right? And we'll talk a little bit about where the levels are going into our session in front of us on the SPY chart. This is the most important chart for us to watch today. What does the market do on SPY today? 694, right? 694, massive level demand. That was all we held yesterday. And most importantly, I think even beyond the SPY, I'm watching QQQ today. I'm watching that 632 level, the major hold spot from yesterday's session. This is the level that I think must maintain today. And this is probably the most clear chart this morning in terms of our ETFs, right? SPY and Qs, both interesting, but QQQ, I think, has more relevance this morning for us to keep an eye out on. It's that 632 demand below. What does the market do at this level? Okay, we're gonna jump into it, guys. We have a lot to go over. We have Apple. We have the Appler to go over this morning. Apple is a sleeping giant, and I think a big move is. I mean, obviously, it's easy for me to say that because it's earnings, right? But Apple is so interesting to me, right? Because it's like you have all these other tech giants moving up with the market, but you have one of the biggest tech giants, right? The OG tech giant, not moving, right? Very consolidated, right? Not really moving with the overall market, right? Weaker. For example, look at Meta, right? Meta post earnings. Look at the Googler, right? Look at Google at all time highs. Plus, look at even Nvidia. Right? Even Nvidia, low sleeping, but Nvidia still stronger. Everything is stronger than Apple, and Apple is usually the gold standard. Usually, people move money into Apple when the market is actually uncertain because Apple, even though it is a tech giant, it is one of the safest tech giants, is what people say. Or why? Because it's a cash cow, right? So we'll go over Apple today. I think Apple is really interesting going into our next week. Maybe not today or tomorrow, but I think post earnings, Apple is going to see a lot of influx, right? A lot of inflow. So we'll go over that chart today. Okay. Besides that, guys, I want to go over some things. Obviously, some pre-market things happening. Meta earnings. This is the firework this morning. This is the show this morning. So we'll talk about that this morning as well. Okay. So in terms of earnings reports, econ data, I want to jump into this quick, guys. Today's session is important because we have econ data and earnings reports all over, right? This morning on this beautiful Thursday, January 29th session, we have data festered, right? In terms of our earnings side, yesterday we had Microsoft, MSFT, we had Meta, we had Tesla, right? Tesla is also, here's the thing about Tesla, right? I wouldn't call I'm hesitant to say that Tesla is also a sleeping giant, even though if you look at Tesla, it's the same chart as Apple, right? The reason why I just don't think they're the same company, I obviously, right, they're very different. Tesla is not Tesla is never perceived as a risk averse asset, whereas Apple and the wealth managers in the chat probably are like rolling their eyes when I say this, but Apple at least is a little bit more risk averse. So when the market moves to all-time highs and you start seeing some uncertainty, you see inflows in Apple and you see outflows of Tesla. So the point I'm trying to say here is, even though Tesla is a little bit of a weaker name as well, I would not put it in the same category as like a sleeping giant that's going to wake up because I just don't think it's the same. Now, granted, we'll go over Tesla today. We'll talk about it and we'll discuss what's going on there on that chart. Did you guys see that they are stopping the production of the Model X vehicles? I don't know if you guys saw that in their most recent report, but that's what they're doing, right? It's an interesting shift in the market. They are stopping the production of their Model X vehicles, and the cited reason is they have capacity in their facilities, And so they are trying to free up capacity for their robotics team, right? So it is an interesting thing. Like I want you guys to understand that these pre-markets are not always about. I don't want to just throw you guys levels all the time. I want to talk about things that are happening in the market, and that's an interesting push. Is Tesla is making space for the robotics, right? Tesla is making space for the robotics. What does that mean? That means that's a new product line they'll be pushing, right, in the near future. Okay, Thursday pre-market we have Mastercard, Caterpillar, Nokia, Nasdaq. In the after hours today we have the Appler. I'm excited to see what happens here. We have Visa and we have SoFi tomorrow morning as well on the Friday session. Okay, so econ data for this week. Obviously, yesterday was all about FOMC. I went live during FOMC. I spoke about the levels during FOMC. I don't know how many of you guys actually showed up to my FOMC live, but it was nothing happened, right? We were just there. It was a watch party. We watched the candles go like this, like this, like this, and like this. It just did nothing. It was a flat FOMC session, very lackluster, and you can see that the close yesterday closed us almost on the SPY chart where we were at right before FOMC. So really nothing big yesterday in terms of our FOMC session, but earnings did give us some velocity, right? Some oomph in one direction. Okay, going into our today's session, we have jobless claims at 8:30. Jobless claims already came out this morning. The numbers are as follows. Listen here, right? Simmer down. The U.S. continuing jobless claims, 1.827 million. The estimate was 1.86 million. You guys can't hear me? No sound. No sound in the chat. Everyone's saying no sound in the chat. All right. That's not good. Laggy, Brett. Refresh. Close the stream and reopen me. Close the YouTube and then reopen the same stream. I wonder if it's... you know what it may be? It may be because I have no delay right now. Because I was trying to do this during the FOMC session. Sound is messed up. Okay. Guys, on my end, it looks good. I recommend closing the YouTube and reopening the YouTube live stream. Because that's probably what's happening. Close and reopen. I'm gonna type it out. Close and reopen. I can't even type. Reopen the live stream if you cannot hear me. Okay, just refresh it. All right, there you go. Good, we're awesome. So let's move on. For the people that are here that can hear me, I'm just gonna move on as if we're good. So what I was saying basically was that we have data today. We have 8:30 data, which has already come out. We have 10 o'clock data, factory orders here as well. Tomorrow we have PPI, final demand, 8:30 in the morning, which is also big. It's just an important release tomorrow, so be aware of that, right? Don't be full porting SPY 1DDE tomorrow, swinging it into our pre-market session tomorrow morning because the market will react to that. Okay, 9:45 PMI, and that's all we have to finish off our Friday session. Okay, let's move on. I am going to jump into the SPY chart, and we're going to talk about what happened yesterday. So let's talk about it. Yesterday's session, me and Mike hopped on the horn. I told you guys what I thought. I told you guys my bias. I told you guys what I was thinking. I said I had a hard time longing into these highs. I just couldn't do it. So yesterday's session, I shorted the market, right? I shorted SPY right here. I actually shorted SPY twice. The first time I took a 10% loss. The second time I made close to 40%, right? This was my two shorts yesterday's session on the market. They called me stupid. They said, don't trade the shorts because the market's in a bull trend. And what do you know? The market sold off, right? The market sold off aggressively into our demand lows. And if you came to the live stream yesterday, you probably did well yesterday, right? If you came to the live stream, you understood what was going on, and you trusted the levels and the ideas, then you probably maintained and did pretty well, right? Now, going into our afternoon session, I hopped on the live stream, and I don't know how many of you guys were actually on the YouTube live. I don't think we really had many people. We had like 400 people on, so it wasn't many of you guys. But for the ones that were there, the one thing that I kept reiterating during that live stream, I said it probably a dozen times, was I would not be short back into demand lows, right? I was here, it was here, it was here, it was here, right? It was demand lows all day yesterday into the afternoon session. And the reason why this level was so important was because it was the demand lows. It was the Tuesday's lows and it was the Monday's highs. This, in my opinion, was a long, right? So if you understand something, right, you don't just go into a session with a bias that you stick to the whole session, right? Because it doesn't always work that way, right? The market at supply is bear bias, but the market at demand is long bias, right? And so what we make very clear during our stream was, first of all, during market open, during live trading, we shorted here. This was our bear bias, right? Our bear bias in full effect in a downside move. But then eventually the market pulled back to demand. And even if you were a bear bias at market open, your bias should have shifted as we approach demand. Why? Not because of any magical read in the market, not because of any wizardry, right? But simply just because we pulled back to a level, right? And as long as we were maintaining that level, which was 694 as our Monday's highs and our Tuesday's lows, we knew this was an area in the market could possibly hold, right? And so this level maintained yesterday, and I didn't take longs. I'm not going to say I did. I didn't take longs here. I took shorts here, but I didn't take longs here. I just kind of watched it play out and saw it close a little higher into the pre-market session. But the most important thing that we've done here is we've developed a really important hold spot in the market, right? This 694 now is my massive inflection point in the market. If we are above 694, I still think that we should be, if you are shorting the market, right, into 694, you are doing something wrong, right? Do not short back into 694. That's the most important thing that I'm seeing now time and time again is how strong this level is, right? So my first thing today is, hey, if you pull back to 694 today, I'm probably looking for longs there for an upside move, right? 694 is a big hold spot. If we lose 694, then we can see a sustained downside move back into 691 and possibly 686. But as of right now, as long as the market's holding 694, the market's maintaining trend and we're bullish, right? That's just what it is. In the short term, even though I'm saying the market's bullish, again, I have another problem today. My problem today is that I can't be long back into these highs. I have a hard time getting long on these pushes higher, on these gap ups higher into our S&P 500 supply, right? And if you zoom out for a second, let's just zoom out to, say, the 4-hour chart here. Well, you're going to see exactly what I'm talking about, right? This 4-hour chart has shown us that there are rejections at these all-time high supplies, right? You can see back from the 28th, which was yesterday's session, rejection there, back into the Tuesday, the 13th session high, there's some rejections there. And we're right back at that same rejection point here this morning. Again, I'm not saying we can't break the supply, right? In fact, yesterday, if I saw us break below the supply zone, I would have went long. But today, I just don't want to be long back into the same point I was buying puts at yesterday, right? I was buying puts here at this orange zone yesterday. If we reject this orange zone today, we'll do the same thing we did yesterday, right? If we break the orange zone today, we're going to see an all-time high breakout, right? So my levels are pretty simple this morning. It's not a very clear chart on SPY, but the levels are simple. If we pull back to 694, this is a pullback long, upside move. If we can break and hold above the 697.70s, which was the level we went long at yesterday or short at yesterday, we can break this level, upside move, bam, right? These are my expectations today, right? Again, I don't know what scenario is going to play out. I have no bias right now. We're post FOMC. We are into this Thursday session with probably a crazy Thursday, Friday ahead of us. All I know is one thing is I will look for trend today and I will try to stick with that overall trend, right? But as of right now, whatever I'm doing, it's not going to be long back at the same point that we were short at yesterday. I can promise you that, right? This is just a big supply that I do not want to be long into. If we can break above it, upside. If we fail back below, downside. If you see us fail below the pre-market lows today, 696. If you see us break below this PML, pre-market low, then my expectations are a downside move back into 694. So when you look at my chart right now in SPY, it's crazy. This is probably the craziest chart that we've had in a few weeks on SPY. Why? Because we're choppy, we're consolidated, we're back at the all-time highs. Look how many levels I have here. I got levels here, I got levels there, I got levels here, I got levels there. It's too much going on in my chart, right? And for that reason, I'm out, right? I'm not trading SPY today probably, right? Why? Because this chart looks crazy to me. It looks insane, right? On the ES chart, you look at the same thing and it's like you have levels all over the place, right? There's too much going on right now. We're back at the all-time high supply. We got demand below. What are we doing here, right? And when you have lack of clarity, it should tell you one thing. It should tell you that you don't take the trade, right? Until we get that clarity. Now you have a pre-market low today here at that same level, which is at 7,009 on the ES chart. If you can break below 7,009 ES, we go back into yesterday's lows. But again, my major level, my major hold spot in the market is this 69.88, really 69.90 on the ES chart. I'll make the adjustment there. Mena, thank you very much, Mena. Thank you for supporting. That is very kind of you. Thank you for doing that. But 69.91 is your level. Guys, can you still hear me? Audio check. Can you guys all hear me on the YouTube? And is the quality good? Is the quality okay as well? That's the most important thing. The quality should be top notch. There should be no reason why the quality is not good. Audio is fine. Is the video okay? Hopefully the video is all right. Yes. Quality is A1. All right, that's what I wanted to hear. That makes me feel better. Okay, so your level today is demand is 7,009. Your big level of demand, your major level, you need to see us break for more consistent downside is under here, right? Under this, I'll make it red, right? Under 69.91. I'm going to close this out too, just to make sure I'm not using any data here. 69.91. If we can break beneath that level, that, in my opinion, is where we get downside, right? We get the real downside move under this orange level. Until then, this is a hold spot in the market. This is the FOMC lows. This is the FOMC lows right now. 69.91 on the ES chart is the major level, okay? And on SPY, what is that? That is simply just 694. So we know our levels are down below, very important, and our levels of supply above us are equally important. On the QQQ, things become so much more clear. This is what I was saying. I said, guys, focus on Qs today. I think this is a thing we should be worried about, right? Look at this chart here. Look how clear this is, right? Supply above, demand below. Wow, now that's a chart we can trade off of, right? Look at this, 632 demand below. This was the low of yesterday's session and the pre-market low, and not the after hours low, and it was the FOMC lows, right? During FOMC, I kept saying this during our FOMC live. I said, guys, watch this 632. As long as we're holding 632, we're bullish, right? Bullish. Big upside move, and it kept doing that, kept tapping that level and maintaining. And this morning, we are still above the 632s. So as long as we are holding 632, that's our demand below. Our supply above us, it doesn't take a technical analyst to tell you that it's just right here. It's simply the pre-market highs and yesterday's highs, 637.30, which conveniently, where's that level? Where's that level coming from? Zoom out. Oh shit, it's right there, right? It's right here. We've just double topped. Off of the previous all-time highs here on the QQQ chart. So you can see that's where the supply is, guys. The supply is right there. Our demand, right here. 632 demand, 637.30 supply. The market conveniently topping out at the all-time highs on QQQ. And so what that has done for us is it's so much more clear than SPY because I only have two levels here. I have 632 and 637. If you want consistent downside of the market, you want to see us under 632. If this happens, break, retest short, downside move, right? If you want to see upside in the market, break, retest, upside move. If we stay in yesterday's range between our FOMC lows and our FOMC highs, if we stay in this range, right, like this, then the market probably is choppy and isn't doing much today, right? This would be your worst case scenario today's session if we just stay in range. Ideally, we can break above the highs or we can break below lows. That's what I'm looking for today's session. Someone said, MJ, you won't trade the Qs. You're absolutely right. You're probably right. I will not trade it, but I will watch it, right? You are not wrong. You were not wrong, but I will watch this chart, okay? And what does that mean? It means that I will use this as my confirmation to trade other tickers, right? That's just what I'll do. But you know what? Maybe now that you said that, maybe now I'll trade Qs today. So you just made a big mistake, okay? I'm just joking. So let's go over the first ticker today's session, Apple. So Apple chart has earnings tomorrow, or today really in the after hours. But I am really excited for Apple because I think that Apple, in my opinion, is setting up a really nice tactical break above 261. I will be looking for longs above this level. If we can break above this level post earnings, That's my top watch, right? For that break and retest. Why? Because you can see here a little bit of an inverse head and shoulders, right? A little bit of an inverse head and shoulders, whatever you want to call it, right into a supply zone. In my opinion, this is setting up a big break, right? If we can break above 261, I'm looking for the break, retest, and the upside move all the way into the upper 280s. This is a chart where I think there's going to be a catch-up play, right? Now, again, in order for the catch-up play to make sense and for it to actually come into fruition, we need to see Apple break above 261. If it can break above the rejection points that it has shown us previously, which is 261, right? Then the market can clear this out and we can see an upside move back into the next leg of resistance. So I am watching this, right? This is a top watch for me. Here's the thing: is when you go to a larger time frame, though, you can see it is also a head and shoulders on a larger time frame. So I don't love that, but I still like the idea here. 261 would technically invalidate that larger time frame head and shoulders. So we could still watch this, even though you have a larger time frame head and shoulders. If it does clear 261, which there is an if statement behind that thought, then we can look for upside. In no world am I longing this before earnings. In no world am I longing this under 261. I'm only longing it on a clearance of that level. Okay, moving on, guys. Nvidia. So Nvidia is also setting up for a move, and I am watching it in either direction today. Again, post FOMC, this is something I want to say is really important. Post FOMC, you probably want to stick with the overall trend, right? This is where things become relentless, right? Post FOMC, you typically get big trend days. That's just usually what I find in my own back testing. So on a day like today on Nvidia, I think Mike and I spoke about the 190 bounce. So yesterday we spoke about the 190 bounce on Nvidia, and you can see 190 maintained, right? Now, no longer would I be watching the 190 bounce. Today's session, I am watching for one of two things. I'm watching for a break and hold above 192.5s, which would be the highs over here, the consolidation highs. If we can break this level, I think we see upside, a trending day. If we can break below 190, I think we see downside, a trending day, right? So essentially, my view on Nvidia is let's look for a trending day, either above the highs of yesterday or below the lows yesterday, right? And so what does that look like? It looks like this, right? A break, a retest, an upside move, right? Scenario number one, okay? Scenario number two is a break, a retest, a downside move. So my scenarios on Nvidia are basically, do we break the highs or do we break the lows? And do we set up a trade, right? That's my mindset, okay? So watching Nvidia, top watch today's session. AMD. The AMD chart is doing the same thing, but I would actually be more sided to the short side at AMD. And I think that we spoke about this yesterday. And again, you don't have to do it yet, right? And I think it's important is I don't want to do it yet. I'm not buying puts in this chart right now. But under 250 is where I think we get a decent downside move. And the reason why I say that is because yet again, right, I mentioned this yesterday, but this was your retest level for longs, right? We broke out above this retest level. We broke out and never gave us that proper pullback to that 239 to pick up liquidity and rip. And so for that reason, I'm still watching the 250 short, because if you clear 250, my view is that we can revert this whole Wednesday upside move back into that Tuesday's highs, and we can actually look for longs there, right? So again, I know I'm being very repetitive right now, but that's how trading is sometimes. Trading is repetitive. Under 250, downside, back into 239, back at 239, upside, right? That's my bias here. If we can hold to 39, this is still a bullish trend here. In no world am I saying AMD is bearish and going to zero, right? But I am saying under 250, it goes to 239. And so that's my watch here on the short side, okay? Moving on, guys, let's go over a few other tickers. Let's go over the SMH. The SMH is so strong, but you have to look at this chart in the eyes of where's the pullback long set up. And if you look at the SMH right now and you just reset everything and you zoom out to maybe the 1 hour chart, you can see that this chart, it makes sense. It typically does make sense. And right now it's at the period of time where it requires a pullback, right? And I could say that with confidence that this chart will pull back. And where does it pull back to? I think it pulls back to 408, right? If it could pull back to 408, that's your new long idea here on the SMH chart, right? So 408 pullback long, it's a pullback long spot to look for re-entry for longs. But as of right now, It's not doing it, right? You don't want to be longing back into double top highs after an extension move higher on the SMH. I think it's important to understand that, right? In no view is this bearish, but a pullback for an entry to go long is what you're watching here, right? And that same thesis, right? That same thesis that we just said here, that same idea is also true on your GLD, right? We're not bearish here in GLD, obviously, right? But you need to see a pullback, right? The pullback is necessary for this to continue to go higher. And it's interesting because you're seeing like such a massive influx in these precious metals, right? GLD ripping, SLV ripping, Bitcoin. What is Bitcoin doing? Bitcoin not moving higher. I wonder. It's probably because like IBIT. It's probably because of everyone's moving their assets to gold, right? I think there's going to be a play on Bitcoin too. I mean, look, if you want a smart play here, probably long some Bitcoin, because if people start rotating out of gold, you can just long Bitcoin, right? In demand, right? Long Bitcoin in demand around the 80s. See if we can get an entry in the 80s here on Bitcoin. This could be a long entry, guys. I'm very serious about this. I'm not just joking. This is a serious entry. For me, this chart is weak primarily because of the influx in the metals. If you consider inflow into metals, if you see us pull back to the 80s on Bitcoin, this could be a swing trade, right? I would keep this on the watch. You have to understand something, right? When everyone starts talking about one particular thing, right now everyone's talking about SLV and GLD. You know that you missed the boat for longs, right? And you have to start looking for the other things, the things that people aren't looking at. The Appler, right? The Appler, Apple, maybe a little Bitcoin, a little Bitcoin action, right? No one's talking about notice no one's talking about Bitcoin right now, right? Why? Because it's lackluster, it's not performing well, right? But it will shift strong, right? When people rotate out of silver and gold, where do you think they put their money into, right? When they start taking profit in gold and silver, they don't just sit in USD, right? They're going to move their money to another asset that they think is going to pay them. And what that asset is probably a Bitcoin, probably an Apple, probably another equity, maybe a bond, right? But again, it'll be something. And that's what happens is you get the strong names turn weak and the weak names turn strong. That's how the market works. So when it comes to like SLV, everyone wants to buy SLV right now, but why, right? Why? It doesn't make any sense, right? This is not a buy, but what is a buy is maybe a Bitcoin, right? Maybe you can get behind it. And this is important is I don't like to just sit here and tell you guys what not to do. I also like to tell you what to do, right? And when it comes to investing, right, this type of chart right now is a chart that I would be looking to get into, okay? And again, it doesn't mean buy it full port today. It means wait for that drop to 80s, right? If you get the drop to 80s and you want to see a little entry there, you can play with it, right? So that's what it is. Okay, let's move on, guys. Let's go over some other names. Let's go over Tesla. Tesla 450, right? You can see Tesla's in the mud, right? Tesla is in the gutter, and it's in the gutter as long as it's under 450. It's a sad stock. 450 can break. We can get some continuation here. I think we can see it move into 470s. But again, I think that some of you guys are probably getting tired of me saying the same thing, and I am too. I'm getting tired of this. I'm tired of saying Tesla 450. Break the goddamn level and do it, right? But I don't know when it will happen. 450, if it actually breaks, we'll see consistent upside. But time and time again, 450 is the stone wall, okay? It's a stone wall that this chart is having a hard time breaking. If it can break above it, then we'll get the big upside move. So keep that in the back burner. 450 break, macro breakout, okay? Let's go on. Let's go to other names. Meta. The Meta chart. Meta. So this is obviously a big, exciting move here. And you can see something really important that I want to discuss with you is the fact that if you go to the daily chart here on Meta, right, look at where Meta's going to. So do you see that there is a gap to fill here? I want you guys to see this. You see there's a gap to fill here between 681. You see right over here, right? Between this level here, 680 flat, okay? And the gap technically is right into the low. I would say that you can here's the thing, right? Some people will say the gap ends at the low of that wick. Some would say it's at the close of that body. For me, I'm gonna say it's right over here at 742, right? That's where it is. The end of my gap fill on Meta is between here and here. And so when you look at what Meta just did post earnings, it literally has moved into a gap fill and did the whole gap fill, right? And so when you look at this chart now with these two big levels charted in the daily time frame, you'll see that, damn, Meta is literally right back at is rejecting right at the gap fill level, right? It's not, this is why technicals matter, right? Look at that chart. It is literally at the wick low of that gap. It has completed the gap. The whole gap fill has completed. So what do you do right now? Well, the move has already happened, right? The boat has already shipped. The boat's already halfway across the Atlantic, and you're trying to get into it, or you're swimming. You're swimming to the boat, but it's already crossed the Atlantic. I think that you just have to sit it out now because it's already made the move. If you wanted to long the gap fill, you would have taken profit here, right? And so for the people that were long prior to earnings, right, previous to our earnings report, right, they're going to be taking profit now into open. So understand this: 742 big supply zone. It's big supply. It's a gap fill completion. Our big demand below is really back at the 680s, guys. It's back at the 680s, and I can't change it. I can't change the levels here. I can only tell you what it is. So if you want to look for consistent upside, you want to look for more upside, it's got to be back above the 742s. If it can reclaim it, upside move, right? But as of right now, do not be long in the 742 because this is a big supply where the market could reject off of. If you want to look for a long and a pullback, the 680s is a beautiful pullback long. I know it's far away, and reality is we probably don't test it, but this would be a pullback long. So I know my levels are all over the place, but that's what it is, right? It's 680, big demand below, 742, major supply above. Guys, that is it for me today. Look, I know we didn't go over everything, but I went over as much as I could have. I hope you guys all have an amazing Thursday session. I hope you have an amazing Thursday and an amazing Friday. I have a big announcement for you guys on Friday morning, so you have to deal with that Friday. Be here Friday morning or be square. I'll see you guys all for live trading. Bye, guys.